Good morning, everybody. This is the live market open for Wednesday, November 16th. I'm Yohay, Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX3. Okay, we're a week after the US elections. We'll talk about recent developments in markets, of course, as usual, and discuss charts and levels, major pairs, crosses, everything, discuss the upcoming events, analyze, explain what's going on in markets in relation to the elections. Why is the dollar rallying? Our currency of the week is euro dollar. It's not only Trump. And of course, we'll preview the week ahead and wrap up the show as usual. Your questions are always welcome as always. If you cannot see the chat box alongside the video, please go to this address, tlk.io/fx3-forex-live-video. Okay, so what's going on in market? What's the market mood? The Trump-related news continues having an impact. Transition team plans what President-elect Donald Trump intends to do and what he doesn't intend to do. Remember, he made a lot of promises on the election trail. Things are slowly getting back to normal because we have a busy week this week with lots of indicators. Oil is weakening, well, and also bouncing. Lots of uncertainty towards the OPEC meeting at the end of the month. Remember, we also have OPEC, not only Trump. And we have more significant events lined up, most of them tomorrow. Okay? Let's talk a bit, before we move on to the charts, let's talk about what we had so far in terms of data. US jobless claims are 254 last time, basically in range. Consumer confidence data analyzed before the elections went up to 91.6. We'll see if it moves up or moves down after the elections. Maybe half the country sees it going down and half the country sees it going up. US retail came out much better than expected, rising on the headline, on the control group, on the core figures, and also on top of upwards revision. So US data has been positive. Also, Japanese data has been positive. Doesn't really help the yen. The economy grew by 0.5% quarter over quarter, which is quite solid, but that's in real terms. In nominal terms, a bit less because prices continue falling. It's not what the Bank of Japan wants. Chinese retail sales did disappoint, but the rest is okay. More data for you. I have it here. German GDP missed expectations with only 0.2, but Italian GDP was okay, so it's all in all no change. The Eurozone GDP is at 0.3, and UK inflation we had yesterday, it came out a bit below expectations, but it doesn't seem to move the Bank of England, which sees higher inflation because of the weaker pound, because of Brexit. Okay, today we have other figures over there. Okay, so today's figure, inflation in the UK. Today we have the jobs report, jobless claims for the month of October, fresh data, and the employment figures, the unemployment rate and wage data for September. Let's see if things move over there. We have also producer price index from the United States, so it's a warm-up for the consumer price index. Also industrial output, oil inventories as usual, and for those trading the Kiwi, we have the also PPI over there. Okay, so this is what we should expect for the rest of the week. This is our coming up segment. Coming soon, quite a busy day tomorrow. For those trading the Australian dollar, we have the Australian jobs report in the middle of the night. Should move the Australian dollar now that the dust has settled from the US elections. Well, partially settled. Tomorrow morning, we have retail sales in the UK, sort of the third of the winning streak, not winning, but third consecutive in the kingdom. We have the final Eurozone CPI figures. Okay, this will remind us that there are good reasons to sell the euro. We have the ECB meeting minutes. This could serve as a hint for the European Central Bank's meeting at the beginning of December. Will they add more QE or not? We'll focus, of course, on the euro in a special segment later on. Big event in the United States, CPI inflation figures. Why is it important? It's always important for the Fed. It could be the final nail for a December rate hike. Expect more inflation down the line with fiscal stimulus from Trump. This also will give us a baseline of where inflation is before Trump. And housing starts, which tend to offset each other. Jobless claims like every week, which should remain in range in the Philly Fed Manufacturing Index, the New York Manufacturing Index to the upside. A very set of testimony at 2 GMT will release a statement with a written prepared testimony, and then we'll have her also answering questions. The Senate is still, well, the old Senate, but anyway, to answer questions about the Fed's reaction to fiscal stimulus, and perhaps talk also about her future. Remember, Trump doesn't want her in office. Her term ends in, her tenure ends in February 2018. Okay, a year and 3 months from now, a lot in politics, but in terms of central banking, it's not such a long time, and there are already speculations. There's already speculation markets about who will inherit Janet Yellen. So very busy Thursday. On Friday, we have another central banker for euro-dollar. We spoke this week in Rome. Didn't say anything significant in Frankfurt, where the East will end. Also an opportunity. It's going to be after the inflation data, after GDP data, an opportunity for him to speak about the ECB's plans, more QE, bring down, or how are things going on in general. I'm sure he's happy to see a weaker euro. The Fed, which votes next year, I will speak at 10:30. Canadian inflation data, if you're trading the Canadian dollar, of course, that's very important. And the hawk in the Fed, Esther George, will be speaking at 2:30 GMT. So this concludes our upcoming events. Very busy week in the second half of this week, and you should watch out for all these events. I would say that speeches from central bankers, Janet Yellen, Mario Draghi, and also inflation in both areas make euro-dollar sort of the pair of the week. Okay, let's see if we have any questions. Good morning, Ed. How are you doing? Good morning. Any questions from you or from anybody else? Of course, questions are always welcome. So now let's continue to the charts. So this is our technical segment about major currency pairs. Then we'll do crosses separately. So I was talking about the dollar taking a breather from the rally, and that's what we've seen yesterday, and also today until, well, until an hour ago, because now we're seeing euro dollar dip below 107. 106.99 is the level I see here. Basically rejected. I still suspect it. I still see 107.10 as support. If we zoom out a bit, we'll see that euro dollar is trading at the lowest levels in a year. Okay, quite a big fall there. Look at the spike to the upside, reaching 113 when there were high hopes of a Clinton victory, and then when the mood, before the mood changed, when the US dollar was selling on an apparent victory by Trump before things totally changed. Anyway, let's run through these levels. On the top side, 113.70, very high resistance, followed by 112.80, 112, 111.20, which is still a strong line to the upside. 110, of course, a very round level. 109.60, 109, 108.50, which didn't hold too long. The old line of 108.20 is still a bit relevant, and I still see 107.10 as support. I see the current move as unconfirmed at the moment. We'll have to zoom out a bit more to see where the next levels are, because these are levels that the euro dollar hasn't stayed at for quite some time. So we're talking about 106.50, which is not such a strong line, and then 105.20, which was the low level that the pair visited back in March, sorry, in December 2015, when Draghi introduced more line. Here is the low seen in March 2015, 104.60, the last line in the sand, the lowest level in over a decade, okay? But I currently, you can see that 107.10 is a very strong line. For me, it hasn't been broken yet. If it will be broken, there's a lot of room to the downside. Some are talking already about parity. Okay, let's continue to other major pairs. We talked about euro dollar, pound dollar. Pound dollar is at 124.80. Lots of mood swings with the pound. So levels I'm watching here. Let's begin from higher ground, because we did see pound dollar rise to higher ground. Fascinating currency pair. Remember that the pound had a super Thursday just before the elections 2 weeks ago. Anyway, 127, 128 is high resistance. 127.90, that's the first post-Brexit low. 126, strongest worth mentioning here. 126.90, okay, followed by 125.50. Sorry, 125.60, 124.80. The current level, more or less. 123.20 is the next line of support if the pair continues falling. Currently, it's quite stable this morning. 121.70, 121, and of course 120. In the flash crash in early October, we've seen much lower levels, but now the pound has lots more support. Okay, so the bigger levels here are 123.20 and I would say 126.90. Dollar yen, look at this amazing rally. Okay, so from election night, when Trump was seen as the victor, we fell to 101, but the quick turnaround over there, we've seen it move a lot to the upside. So currently we're already looking towards 110. At the time of our show, we're at 109.35. If we look to even higher ground on dollar yen, one of those pairs, then we can find 111.40, okay, which was a high earlier in the year, 112, a round number, and 113.80. Even higher, 116, which used to be a line in the sand for the Bank of Japan late last year, about 1 year ago. That's a very high level up there. To the downside, 127.50, strong support, followed by 105.50, 104.60, 103.30, and the round number of 100. Currently, dollar yen is storming forward. We'll of course explain what's going on over there. And of course, well, it's the dollar rally, okay, which is resuming as we speak. Dollar CAD, the Canadian dollar, will be hurt by worsening trade relations, but it also managed to recover a bit. So we already reached 136. I see resistance at 136.40, support only at 132.45. Well, we should mention in the middle we have 134.60, which is about the current level. I'm mentioning this level as it used to work as support quite times. So as resistance as well. So we have this line here. Okay, so, but currently it's more of a pivotal line within the range. If we look to even higher ground, 140, it's the next level of resistance, followed by 143.25. To the downside, as I mentioned, 132.45 and 130. Ranges are a bit wider in dollar CAD, also due to the bigger fluctuations in oil prices. Aussie dollar, like other commodity currencies, it's suffering, but still in range, very much. Unfortunately, Aussie dollar has become a bit more boring. Anyway, currently we're at support 75.33, further support at 75, resistance 76, 76.60, 77, and 77.40. Under 75, we have the 74.40 line. Very narrow ranges here on Aussie dollar. Maybe the jobs report will change its mind. New Zealand dollar suffered quite a lot. Unfortunately, also had tragic news about an earthquake this weekend in New Zealand. Central bank cut interest rates. Anyway, as expected, 71.60 resistance, followed by 72, 72.65. To the downside, 71 and 70. Okay, dollar Swiss began talking about it a bit more. We broke above the line of parity. Above parity, we have 1.60, 1.0060, and then 1.02 to the downside. Parity now serves as some kind of support, followed by 98. Well, before 90, we have 99, but then 99, 98.50, and 98. Let's see if the Swiss National Bank does not intervene here. Okay, and yeah, so these are the technical levels for major pairs. Okay. Now let's continue. Crosses, and we'll spice it up with two other things. So speaking about the crosses, we'll begin from Euro Swiss. I believe the Swiss National Bank is intervening here. If you're trading this pair, use a lot of caution, okay? It's quite messy. So anyway, T for me is the line in the sand, but perhaps market forces are stronger than the Swiss National Bank. Anyway, we've seen also, we can mention 106.90 as some kind of resistance. I believe the Swiss National Bank will push it back into range. The range is 108 to 110. 106.90 should be watched, and 107.60 for now. Euro pound, quite crazy moves here. We've seen the pair move, well, fall from 90, currently at 85.90. So resistance here at 90, sorry, at 86, 86.50, and 87.15, and further above 87.70. Support at the round number of 85 and 84.20. Euro yen moving a bit to the upside as we speak. 117 because of the weakness of the Japanese yen. 117 is support, followed by 115.80. Further support at 114.50, if I'm not mistaken. Let's not the currency pair focus on. Yeah, 114.50, 113.80, 112.80, 112, and 111. But if we move further to the upside, we have 118.50 and the round number of 120. 118.50, you can see it's a double top over there. Last seen, well, in the summer. Pound yen, the Gepi, the Dragon, crazy pair, currently 136.30, further above, well, 140, followed by 143. To the downside, we have 132.50, 129, and 125. Crazy moves here. Well, today, relatively quiet day, just 100 pips. Again, these pairs should be traded with care. A lot of care. I know it's a very popular cross. Okay, we covered the crosses, but let's add a look at dollar Mexican peso. Here we had a move all the way to 21.40. Trade relations could be worsened even if there's no wall. The round level of 20 works as some kind of support, followed by followed by 18.20. That's the range, and 17.80. To the top side, of course, we have 21.40. We have some stabilization there. Speculation about the next moves of the Mexican government, Trump. He's bit, but let's see. And another thing to top off for crosses is the price of oil, as we usually do. 45.60 is the current level. We bounced off support there at 42.15. Resistance, strong resistance only at 49, followed by 52, which is a double top. If we fall further to the downside, yeah, it's below 42.50, it's 39. A lot depends on that OPEC meeting. Okay, so that concludes our segment about crosses. I see here a question by FX Ambassador, who says, I think the GBP, the pound move is a sell on a rally. Let's look again at the pound. Well, the pound currently, listen, the pound does have reasons to rally. Yesterday it fell because of inflation, but it does have reasons to rally. I will mention a few. We have the British pound enjoyed Super Thursday just 2 weeks ago. Let's remind everybody what happened. We had good data from the UK, positive services PMI, positive PMIs in general. Let's see if data worsens this week. The first data point was weak, but the second thing that was good for the pound was the court ruling. The British High Court ruled that Parliament must discuss Brexit. Only Parliament can trigger Article 50. That means there could be a delay. Parliament will probably not defy the will of the people that want to leave the European Union, but it means a delay. There is still an appeal to the Supreme Court in early December. The third good thing that happened to the pound is the rate decision by the Bank of England, the big rate decision with the quarterly inflation report. And Mark Carney told us that they're now moving from a bias, a dovish bias, to a neutral bias. Rates can go either way. They can even raise rates. Why? Because the economy is not tanking as much as expected. The weak pound is pushing exports higher and also pushing inflation higher. So there's no need to cut rates. This gave a big boost to the pound. Afterwards, we had the US elections and everything. Hi, I hope you can hear me. Sorry for that glitch. Had an issue with the internet. Hopefully, this is the last time we have these issues. Next week, I'm returning to my home office. So I hope you can hear me. So let's, yeah, okay, great. Sorry again. Let's get back to the screen and continue to our next segment. So we talked about technical levels for crosses, technical levels for other, for of course, major pairs. And our next segment is the US elections. Okay, here is the current president. All good now. Thanks, Ramon. Hi, everybody that joins. Here is President-elect Trump shaking hands with President Obama. They're not really good friends. Anyway, Trump will become president in 2 months. So what happened in markets? This is our special segment about explaining what's going on with Donald and the dollar. So markets initially fell. Currencies that went up were, well, the dollar went down, and alongside markets, so the Japanese yen, safe haven, went up, so did the euro, so did the pound and the Swiss franc. Commodity currencies, risk currencies, the Aussie, Kiwi, Canadian dollar, and of course the Mexican peso went down. But then we had a big turnaround in the early hours here in the morning, sort of around, I would say, 6 GMT or something like that. First of all, we had a buy the rumor, sell the fact. Okay, so markets already had enough time to digest the fact that Trump was winning until the official announcement came. I mean, it was clear he won Florida. He had a good chance also in Virginia. And then he was leading Pennsylvania, and things looked good for him. It took another hour or two, and markets already turned around quite quickly, quicker than Brexit. Then we had his acceptance speech. Okay, he came out to his supporters and was very, very positive towards Clinton, very gracious, told all the world, don't worry, we will treat everybody fairly. And he was smiling, not the usual angry and vicious and nasty Trump that we know. So this spurred hope. We had a big turnaround in markets. So after the Nikkei fell for around 5%, European markets already opened a bit more mixed, and US markets opened more positive. In currencies, we had the yen, euro, Aussie, Kiwi, CAD, and Mexican peso all down, and only the Swiss franc was holding up, and also the pound, remember, Super Thursday. So that was the big day, Wednesday last week. Okay, but why was this big turnaround? So let's explain what's going on in markets. I mean, the rationality, okay? Let me explain. I do have doubts about this, but this is what markets think. Why did the dollar rise? Why did the dollar move up? Donald Trump in his campaign promised tax cuts, lots of them for the rich. Never mind, more tax cuts, that means less income for the government. He also promised lots of spending, not to hurt Medicare, Medicaid, all these programs. Okay, so more social programs, and also lots of infrastructure spending. So again, more government debt, bigger deficit, bigger debt. When you have a bigger deficit, bigger debt, you have to borrow more money from markets. You need to issue more bonds. So if you have more bonds, they lose value. When you have bonds losing value, of course, the yield is more attractive. And higher yields are usually correlated with a stronger dollar. But that's not the only explanation. More spending also means higher inflation. If you think that now people will have more money in their pockets because of tax, and the government will be spending, inflation will push higher. When there's higher inflation, we'll have more rate hikes. And we already heard from Fed officials that if there will be big fiscal stimulus, they will raise rates faster. When rates rise, the dollar rises as well. Okay? So that's the explanation about what's going on in markets. We'll have to wait and see until the inauguration day on January 20th and I guess the first 100 days of Trump's presidency to see if this really turns into reality. Okay? And we'll have to see his appointments now. I have doubts about it. That's why the headline here is really, and that's because, well, the logic goes that it's not only Trump that won, it's also that Republicans have full control of Congress. Senate and the House remain in Republican control. The Democrats did win some ground there, but not enough. So with the White House, the Senate and the House under Republican control, Trump can do everything he plans because everything will be approved, right? So here are the doubts. Republicans do oppose more debt, okay? They are in favor of tax cuts, yes, but they are also, at least in theory, about less spending. So how will these things ameliorate? Where is the middle ground, okay, between Trump's will to spend, and the Republicans who want to cut spending? And Trump is quite erratic. You can just note that after he met President Obama, he said that he will keep some provisions of Obamacare after saying it's a disaster and he will totally repeal it. Trump is very erratic. I mean, he's very sensitive when you talk about his own businesses, but around policy doesn't, well, he cares mostly about himself. So anyway, these things are far, far, far from over. So any stupid speech from Trump, anything that Trump says, no, actually, you won't spend that much, you won't cut taxes that much, things can still change, okay? I believe there will be some fiscal stimulus. Also, Democrats are in favor, and there will be tax cuts because Republicans are in favor. But perhaps it won't be at the scale of Trump's programs that he talked about, that he published on a website online. Okay. At the moment, let's take another look at the charts. Let's go to euro dollar, for example, or euro dollar yen. We're seeing bigly moves, as Trump says, which is actually a word in English. I thought it's just a mistake by Trump, but actually it's a word that exists. So we're seeing the pressure continue. That means the US dollar is moving higher. Okay. Meanwhile, markets think higher dollar, well, more spending, more fiscal stimulus, and things will continue the same. Okay. What's next is also, well, as I said, a lot of uncertainty about Trump's policies. You might choose an insider, Goldman Sachs, called Mnuchin as Treasury Secretary. So not exactly draining the swamp. And the bigger question for currencies, at least, is who will be Fed chair? Here's Janet Yellen with Donald Trump. He criticized Yellen for low rates. Only one certain thing is volatility, okay? Because because of this growing uncertainty, it's good for Forex trading, but do trade with care. Remember Brexit night. Here is Nigel Farage, leader of UKIP, or former leader of UKIP, with Donald Trump in the golden elevator in Trump Tower. And here is Trump with Brexit. Okay, so I hope this explains what's going on. Liquidity is high, of course. We're in the middle of November. No vacations, but moves are crazy. Also, on election night, there were no liquidity problems. Comments here. Market getting ahead of itself, perhaps. It took a breather. The big question is now, for FX Ambassador and for all of us, is was this a breather? And we're seeing a continued dollar rally, as we're seeing right now, or is this, did the market get too much ahead of itself and things will change? Okay. And now let's move to the next segment. Euro dollar, our currency of the week, which is also the world's most popular currency pair. So euro dollar is down even lower this morning, more than I had expected. There was a dollar rush on the elections. We talked in depth about that. More fiscal stimulus, tax cuts, and spending on infrastructure mean more higher interest rates and stronger dollar. But there are also political implications, not only economical, from these elections. Remember, Trump follows Brexit. The populist right-wing national wave is also crossing Europe. So let's look at the quick calendar, political calendar, which is of course slower than market calendar, but important to watch. In December, we have a referendum in Italy. Okay, Prime Minister Matteo Renzi is facing once a constitutional change that will make governance more stable, and polls show he will probably lose it. He said he will quit if he loses this, and that means more uncertainty in Italy. Okay. Also in December, there is the German CDU party. Merkel's party has its conference, and there we expect Merkel to announce if she's running once again or not. If she wins, it'll be her 4th term in office. Okay, so there is some uncertainty. Angela Merkel is seen as sort of the anchor of stability in Europe, centrist, maybe fiscally conservative, but liberal on social issues, right in the center. In March, we have elections in the Netherlands, a small country, but it could, well, but still of high importance, of course. And we also have a right-wing movement over there, led by Geert Wilders. Hope I'm pronouncing it correctly. And the bigger events are, well, elections in France in May, the National Front National, or also butchering the name in French anyway, but led by Marine Le Pen, has a good chance to gain more seats in parliament and, of course, aim for the presidency. Even if she doesn't win, she'll impact the centre-right party, either led by Sarkozy or by Juppé. and the socialists are set to lose because Francois Hollande is very, very unpopular. He has a 4% approval rating. And in the autumn, in September, more or less, we have elections in Germany. So the two biggest countries in Europe have elections. And of course, Brexit is always in the background. For markets, the focus is, of course, on the ECB. There's low inflation. We'll get updated data this week. The ECB is hopeful that inflation will pick up. Core inflation remains weak at 0.8%. Let's see if it moves maybe a bit higher tomorrow. But even headline inflation, which is the target of the ECB, it's moving very slow. Oil prices are falling once again. They're at least not moving higher. We are seeing the diminishing effects of the earlier fall in oil prices, but they're still stuck at around, headline inflation at around 0.5%. Key test is in December. More QE. Remember, the ECB's QE program is ending in March, at the end of March 2017. In terms of monetary policy, that's just around the corner. Mario Draghi told us that in December, he'll have news for us. It's either continuing the program at the current rate of 80 billion or tapering it down or totally shutting it down, which seems unlikely. Growth gives a bit of hope. At least it's stable. At least the continent is not in recession. So 0.3% growth rate we've been confirmed. Also not that exciting, about 1.2, 1.3 annualized. I believe the ECB will continue with the foot on the pedal, more QE for quite a long time, pushing the euro lower. Some think we'll see parity in the early months of 2017. I'm not so sure, but a lot depends on what the ECB does. So my bias on the euro dollar remains bearish, even though I have doubts about what Trump will actually do. In the European side, things still do not look good. Okay. One glimmer of hope, I must say. Today I saw a headline saying that the European Commission wants some fiscal stimulus, no more austerity. Let's see if this really comes to fruition. That will be probably too little, too late. 50 billion euros of stimulus. Anyway, currently the current FX situation is favorable for Europe because exports are more attractive and inflation is moving higher. So that's good for the ECB. Can it last? We'll see soon enough. Let's look at the euro-dollar chart to complete this segment. I'll mention the levels I've talked about before. So the bigger levels, currently 107.10. I still see the move this morning as a false break. Still, well, an unconfirmed move at least. If we fall lower, so 106.50, we could support 105.20. The levels seen in December, very, very strong support, and even stronger support at 104.60, the lowest levels in over a decade. On the top side, we have 108.20, 108.50, much more crowded over there, 109.50, 110, 111.20, and 112.80, sort of the bigger levels on euro-dollar. All in all, euro-dollar finally broke out of range. This is the weekly chart. But remember, euro-dollar did not stay for too long at these kind of levels. Let's see if this time we could have a more substantial move to the downside. Okay. So that's our segment about euro-dollar. No questions. I see. And now let's preview next week's events. So Monday, no big event. If we'll have surprising news over the weekend from Trump's transition team or anything else, that will be reflected on Monday. On Tuesday, we have existing home sales, significant about the US economy. It's for the month of October. Wednesday is quite busy. Eurozone purchasing managers indices, durable goods orders, which reflect investment, very important for the Fed, also feed into GDP. New home sales. Each sale of a new home reflects more economic activity, wider economic activity. As always, oil inventories, and the Fed meeting minutes. The Fed's meeting minutes is the key event next week. It's from a meeting in November earlier this month when the Fed did not make a move on interest rates. A meeting without a press conference, a meeting without new forecast. That means that the meeting minutes will have more to reveal. And this time it'll give us the final hint for a rate hike in December. I want to show you this. According to current expectations, markets expect 90% chance of a rate hike in December. Okay? Because we heard that from the Fed, because of fiscal stimulus, and because of data that has been quite good. So that's the key event next week. Remember, in theory, this is a document that reflects what was talked about back in that meeting. In practice, it's edited until the very last moment. Okay, so a very busy Wednesday. On Thursday next week, we have the German IFO business climate, Germany's #1 think tank. Let's see if the mood changes because of Trump, and Japanese inflation. Watch for the Bank of Japan's core inflation figure, because the Bank of Japan prefers listening to its own figure and not the official data from the government. And on Friday, a revision on UK GDP for the third quarter should remain quite okay. Okay, so these are the events for next week. The main event, as aforementioned, is the Fed meeting minutes on Wednesday evening. All right. So I don't see any questions, so let's do the wrap-up for today. This is the wrap-up for the live market open for November 16th, 1 week after we learned that Donald Trump will become the next president of the United States of America. The dollar is on a roll. A short explanation, we expect fiscal stimulus, tax cuts, more spending that will push interest rates higher. That means a stronger dollar. Things are slowly getting back to normal. There are doubts if Trump will indeed carry out his program, because Republicans might block at least parts of it, his own party. Oil is quite mixed. Watch for more erratic oil movements towards that OPEC meeting at the end of the month. More significant events are lined up to mention in this wrap-up. So I would mention, well, tomorrow is a very, very busy day. Watch out for final inflation figures from the Eurozone, the ECB meeting minutes. That's on the Euro side. On the US side, we have inflation as well. Other figures as well, housing, jobless claims, the Philly Fed, and a testimony by Janet Yellen in which she can give us the final hint for a rate hike in December. Unless, of course, we get a totally disastrous NFP, which is unexpected. So that's a very busy Thursday for you. We also have, well, interesting events in the UK. Today's jobless claims and tomorrow's retail sales are, of course, very important. Let's take a quick overview of the charts. I was talking about a breather for the US dollar, which actually did happen, of course, yesterday and until a few hours ago, but now we're seeing the dollar making further moves. Against the euro, this has been rejected so far. False break under 107.10, but maybe the second move will be successful. Further below 106.50, 105.20, and 104.60. To the top side, 108.20. Pound dollar looking for a new direction. The pound has been one of the more resilient currencies in general. 125.60, 127. To the downside, we have 123.20. Dollar yen is basically unstoppable. Just the only way is up as the sun goes. 109.60 almost, and as we speak, making new highs for the day. And 110 is the next level, of course, and then 111.40. To the downside, we have 107.50 as very strong support. Dollar yen, as Valère Bednarik of FX Street says, once the dollar yen breaks out of range, it continues with the trend for a long time. Let's see how long it is. Nobody knows. The dollar is also strengthening against commodity currencies this morning. Dollar CAD moving up 134.65. Next level 134.70 and 136.40. Aussie dollar moving down as well, 75.18. Relatively boring. The Australian dollar of late used to be one of my favorites. 75, 74, 40, and 73, 75 are the levels to watch. To the downside, 76, 76, 60, and 77 to the upside. Kiwi dollar, a bit of struggle, 70, 80 at the moment. 70 is support, followed by 69.50. Resistance, 71, 60. And I'll mention for a change dollar switch, which is holding up above parity. Watch out for interventions over there. Okay. Let's see if we have last questions. FX investor, pound is being manipulated. Why do you think it's being manipulated? Well, there are lots of moving parts in the pound, remember. And these events are not unrelated. Brexit, when after Brexit, people said Trump can win these elections, and eventually he won. I will mention he won them without popular vote. So according to the recent numbers, Clinton got more votes in the general elections, 900,000 more votes. But the system in the US is the electoral college, and he won narrow enough margins in key states, Pennsylvania, Michigan, and Wisconsin, to win the elections. So you were mentioning the pound dollar manipulated. Yeah, we have lots of moving parts that we have doubts about what kind of Brexit will have. We have confusing signals from the UK economy. Most of them are okay. We have uncertainty about Trump. We have uncertainty about the Fed. I don't think it's being manipulated. I do think things have improved in the UK. We have found the bottom. But let's see what's going on over there. These are interesting times for sure. Not that long ago, we were complaining about the lack of volatility. We can't complain about that anymore. Lots of opportunities, also lots of risk. As far as I know, brokers that changed their liquidity limitations towards the elections have removed them. So I think it could be an interesting time for Forex traders and for Forex brokers. I don't see any manipulation. Only manipulation I can worry about is from the Swiss National Bank on the Swiss franc. Okay, I see no more questions. So that's it for today. Thank you very much, everybody, for coming, for the questions. To FX Street, thank you for hosting. As usual, the videos will be available on FX Street and also later on Forex Crunch. And so that's it for today. Until next week, that's it. Have a great week and trade responsibly. Bye-bye.